Yeah, Conrad, great to see you, and thanks for taking time to discuss our third quarter results. Let me jump right on the topic, because what really stands out is this 230 basis point step up in our EBITDA margin. How do you assess this result, Conrad?
Yeah, good morning, Kai. We are very pleased with this result. 230 points improvement in our EBITDA margins. We finished the third quarter at 17.9%. Also, if you look year to date, we're now running at an EBITDA margin of 18%, and we're clearly heading for a new record profitability level in the company. I will say this is especially a great achievement if you look at still the challenging market environment that we're operating in. Demand is still weak across all of the regions.
Definitely. So this is remarkable, seeing the context and the environment. Nevertheless, let me first ask you what you see as really the key drivers behind this step up in the EBITDA margin.
Yeah, the key drivers have been our performance improvement programs. As you are aware, we finished our first big program that was aiming at 175 million Swiss franc bottom line improvement. We finished that in the first quarter, and we're benefiting from that. Then we also started a new program the beginning of this year, another 80 million Swiss francs cost improvement program. And I'm actually pleased to be able to announce that we already delivered 31 million Swiss francs out of the 80 million target. So we're well on track with delivery of that. And you can see that actually in our results. EBITDA margins have improved in each one of the business units, but also cost levels have come down in all of the corporate functions. So I think it's really a company-wide effort, a company-wide achievement that needs to be celebrated here.
Yeah, that's always a great success. Great job by the teams. Our self-help measures kick in here. So what's not so much in our hands necessarily are sales. You mentioned a decline overall, but you still see growth pockets or other things that drive sales up.
Yeah, we see growth pockets, Kai, but I do want to make one comment. What is in our control is pricing. And I think the teams have delivered very well on that with an overall 1% increase year on year in pricing, which I think is an enormous achievement, especially in a low or no growth environment. And especially if you consider that actually the raw materials year on year were slightly down. In terms of pockets of growth, we see actually strong growth, high single-digit growth for our flame retardants, both in the application of paints and coatings, but also in plastic components, cables, connectors for electric vehicles, but also in data centers. I will say that we also see strong growth in some areas which do not offer a lot of market growth. So the oil and gas industry, the mining industry, they actually offer modest growth right now. But we see actually mid-single digit growth for our oil services business and high single digit growth for our mining solutions business. And that's very much based on the offering of sustainable products. And it is actually gaining us market share in these segments.
Yeah, definitely. So now, Conrad, if you maybe summarize the first 9 months of the year, what we see is, like you said, excellent EBITDA. On the other hand, overall sales are kind of flattish. You still confirmed the guidance, which means we would need to see some additional growth, which is definitely higher than in the previous 3 quarters. What is it that makes you so confident that we will achieve this relatively high growth level in the fourth quarter?
If you look at the bigger picture, Kai, what we've seen is a weakening throughout the quarters. First half was stronger. There was some inventory buildup ahead of tariffs. We did see in the third quarter inventory levels coming down. And now we are actually seeing in the order books a slight pickup and improvement. We see a good order book, a solid order book for catalysts, particularly in propylene to propylene catalysts or ethylene catalysts. In Care Chemicals, last year we had an unusual weak de-icing season. So we are expecting a pickup year on year in Care Chemicals, and additives and adsorbents. We are seeing a similar trend as we saw in the recent quarters, which overall means that the fourth quarter should be a pickup, both sequentially from this year, but also on a relative basis from prior year.
Well, that sounds good. Thanks very much, Conrad, for your time and for your answers. Wishing you lots of success for the final quarter of this year.
Thank you, Kai.